Hey guys, Anthony Walker here with Buckingham Investments. We just put the finishing touches on our first quarter 2024 market research here at the office. So I'm excited to share the results with you and maybe we'll figure out where the market's going. For those brokers out there and agents that make their living on transactions, I'm happy to report that the first quarter of 2024 saw what we may call later some green shoots in the volume of closed sales in our local multifamily market here in the greater South Bay. While the first quarter of 2023 was a 10-year low for transaction volume, 2024 is looking a bit more encouraging. We had 167 closed deals in the first quarter, which is about a 30% growth above what we saw in the same time period in 2023. Now, it's not quite that exciting yet because we're still 26 to 28% below the super busy time that we saw in 2020 and 2021 when the market was hot with all that pandemic money, but still rays of hope here for those of us that live on transactions for our day-to-day. At a personal level, what we're seeing here in the office is a lot more activity, listings, and pending deals on our board. I think it's a sign that that huge expectation gap everybody's been talking about for the last 2 years between buyers and sellers' prices is finally starting to converge and we're getting deals done. Price per square foot at the quarter came in at an average of $472 a square foot. That's down about 3.8% just from the previous quarter. So annualized, that's a huge number. Feels kind of severe. That's 11.2% from the height in mid-2022 though. So really, this is sort of a bumpy ride down that we're experiencing on pricing. Price per door for the quarter came in at about $400,000 exactly on price per unit. Again, a 6.7% decline just from the previous quarter, a big number there, and 13.7% lower than the high that we saw in the middle of 2022. So definitely a down market, absolutely, but we gotta be careful with our language here. Is it a crisis, a crash, a meltdown, or a pick your fear-mongering headline type real estate downturn? Not exactly. This is over the span of 2 years. I think we should have expected it to be slower during this time. Interest rates have nearly tripled in some circumstances. And so the fact that the market's held up actually as well as it has is more surprising to me than the declines that we've seen over the last few quarters. Of course, there's more to it than just the top line numbers. We separate our research into the 2 to 4 unit properties versus the 5 unit and above properties that are financed with commercial loans. And as we've seen over the last few quarters there's a stark difference between the two. The 2 to 4 unit properties are experiencing that lock-in effect where we've got a lot of people that maybe would be sellers that have 30-year fixed loans with super low interest rates in the 3s or even the 2s on a percentage basis, whereas the 5 unit and up property owners, those loans are starting to reset now because those loans are generally fixed for 3, 5, 7, maybe 10 years. So as those loans reset, that's put a lot more pressure on pricing since it's become difficult for some of those properties to be refinanced. So the metrics there for those properties are down considerably more than the smaller 2 to 4 unit properties. Pricing on price per square foot's down 16.5% in the larger buildings and 14.5% on a price per door basis. Regarding income metrics, this is super important stuff for those of you that pay attention to the local apartment building market. The average GRM last quarter came in at 15.6, so that's 15.6 times the gross scheduled rents for the year on value. That was the average sale price. The average cap rate on the same data set was about a 4.6% yield. That all sounds pretty normal. When we look historically though, that's a huge drop. We haven't seen a GRM number in that range since early 2016, and we haven't seen cap rates at 4.6% or higher since early 2015. So on an income basis, we're at almost a 10-year low in pricing. It's a fantastic time to be buying properties if you've got the cash to put down and you can stomach the huge interest rates. So a really interesting contrast when we compare the income metrics pricing on the buildings that sold last quarter to the more physical valuation metrics of price per square foot and price per door, we see a really wide gap when we look historically to see the last time that we were at some of these prices. On price per square foot and price per door, we're only back at early 2021 levels. So really not much deterioration at all. I mean, even the pandemic money was already in the system. Appreciation had already started to take effect from 2020 prices. So we're really not in a major downturn on those metrics, but on the income level pricing, We haven't seen numbers where we see them now on GRM and cap rate going back to 2016 and 2015. So what's the disconnect there? If you're not used to looking at data in commercial real estate, that could be kind of confusing because you would think that those metrics would move together. The reason that they're not is inflation. So the same reason that we're in this problem right now, if you think about it, you could get a better yield on your property, or you could get a better multiple on your purchase if the rents have risen during that time period. So rents from 2015 to 2016 are much, much higher today than they were back then, which allows property owners that have owned for a while to probably still keep their values relatively buoyant, at least on a dollar for dollar basis, and as we described the physical space versus on a yield basis. So if that's kind of confusing to you while you're looking at the data, that was a really interesting takeaway from this particular quarter. If you like looking at these numbers and you want to dig in a little bit more, spend some time with them, maybe filter, we've got a fantastic market research dashboard on our website. That's at buckinghaminvestments.com. Of course, if you want to take action and take advantage of what's going on in the market dynamics right now, feel free to reach out to us, or if you already have a relationship with a Buckingham agent, we would love to help you see what we can do in this market and get you a great deal on a new purchase.